What is up, traders? So tonight we're going to take a look at EURUSD, as I did take a scalp on this trade today and it was successful. I'm going to show you why. Also, we're going to take a look at the broader markets to see if we can make out heads or tails as to what might be occurring. And then obviously the end is going to be about GME and a way that I think retail traders should be approaching this trade, because there is an absolute opportunity staring us in the face. And I'm going to show you how to do that with options. So make sure you stay tuned to the end of this video. All right, what is up, everybody? My name is Heath, and this is Trade Talk. So we're going to start here with the Euro USD. I did take a scalp on this. I was watching this 1.21254 level. If you were watching last night's live stream on the Forex Weekly Outlook video, I specifically said that I would be watching that level. Now, when we came down into the level, we did close a 15-minute candle below. However, I wasn't just watching that level per se. I was also watching the swing low that was put in on the candle body closing basis. Now, the wick low all the way down here is kind of important, but it is not nearly as important as the candle bodies. Now, you can go into a lower time frame chart and you can pick out a level that I'm teaching you newer traders how to look for these levels, one of those levels, and you can find that it is dead accurate all the way down to the 1 minute time frame. So essentially, I was wanting to see how it acted around 1.21254, but I also had this level on my chart, which was the bottom, essentially the bottom. Let me get this over to where it's supposed to be, which was just the bottom of this swing low. All right, so moving forward, let me get price over here so I can show you what is going on. So if you look right here, you can see that I am long still on Euro USD, but I did remove 2/3 of the position when we came up into, well, this is not right. This is absolutely supposed to be this. All right, so apologies for that. But anyways, when we pushed up into this area here, I took 2/3 of my position size off and I moved my stop to break even. Now, if you look at this first line here at 1.21254, that was the area to which I was said that I was going to be watching to see how price reacted around that level. This lower level is just simply that low market structure level, which is where the candle body's closed. And as you can see, not one or two, but 3 attempts to get a closure below that level failed. And then we made a big bullish push, right? Right above that level that I was watching, that I told everybody to watch yesterday. And then this next bearish candle, we came down, we tested that level again, and we closed right there where I said I wanted to watch how the market reacted. The market reacted like that. So I got long on this right here. I took 2/3 of the position off in front of this market structure level here. And you can see once we tested that, if I draw a line right here for you, you can see that we tested that to perfection. All right. So if you've gotten short on this asset based on this, you may be on the right side of the trade. We don't never know who is on the right side or the wrong side of the trade until the trade plays out. So that's something you new traders just have to get through your heads. Nobody has a 100% accurate strategy, but the strategy that I'm trying to teach you, if you are trying to learn how to day trade these Forex markets, is pretty damn good. So you need to make sure you watch every single video. Get into the Discord. There's a link below if you need to. Get in there so that way you can ask me questions if you want. I don't believe anybody has ever left C.T.M. because they understand that the amount of value that is in that chat room is beautiful. So anyway, with that being said, 2/3 of position size off. My stop is at break even. All right. So with today's sell-off in the S&P 500, we did have a little bit of a hectic move today. You can see that we had cleared out all the stops resting below here, and we went all the way down to here this morning. All right. So this was a pretty big sell-off. Now the SPY did close almost unchanged on the day, or the S&P 500 closed almost unchanged on the day. So I don't know exactly what's going to happen with this thing moving forward, but what I can tell you to do is just basically watch price. All right, today is just Monday. We can look for a weekly expansion. You can see here that as of right now, we had this outside week that took out last week's bearish move, right? You took out the low of that candle. You also took out the high of that candle. So last week was an outside day or an outside week candle. All right. So we have basically came back down into this level here. This is roughly around the midpoint. We had tested it, and now we are in bullish territory. So today's sell-off was pretty massive. It was pretty big, but we are kind of unchanged on the day. So nobody knows if we're going to continue lower or if bulls pick this market back up. All right, because you did get a lot of liquidity crushed out today, which is always good. All right, so we're going to drop down to a 4-hour time frame so I can show you how these levels work. All right, so essentially we're on a 4-hour chart. This is the S&P 500 USD, which is the S&P 500 index only tracked through Oanda. This is a 24-hour market with CFDs. We cannot trade CFDs in the United States of America, but I always look at this product because this product shows me exactly what price is doing without any gaps, and it's beautiful. So if you look here at this level I drew at 37.97, spot 40 was essentially this opening price of this last bearish candle here that we had before we took off. Now we did come back down and we did get close to testing that area, and then we had a huge massive push up out of that area. So technically this could be viewed as a test. This one definitely was a test. So it was not an untested level. Look what happened on today's sell-off. You came right back down into that area, you retested that area, and you pushed up higher. Then you got a higher close on the very next 4-hour candle, which in my opinion is important. Now we are at a very important crossroads with the S&P index. If this 4-hour candle closes and makes a new market structure level to the downside, meaning if you get a 4-hour closure below 38.43 spot 40, your next area to watch is going to be this one here. All right, but those areas are pretty close together. So basically you could just box in this whole area like this. Let me see here. There we go. Just essentially take your little boxed in area right there. Take your little boxed in area just like that and say, I do not want to see a 4-hour closure below that. If we get that, then this is just possibly going to be a retest and this market may be heading lower. Now, I am not bearish on this. It's very important that you understand that I am not bearish on this. I am simply looking at this as a buying opportunity, a higher low. All right. And until I'm proved otherwise, and price has to prove that to me, then I have to look at bullish opportunities, which is why I took the long trade on EURUSD today, because we popped down into the area I was watching, and I knew, or I figured at the very least, I would get a bullish pop enough for a scalp trade. We got that, everything worked out, and we are currently heading lower on the EURUSD. So we are currently waiting on that signal to let us know whether or not this thing's going to head lower or if it's going to head higher. So essentially speaking, going forward, if I get a closure below the level that I was looking at, 1.21254 on at least an hourly basis, then obviously we're going to have to wait on this trend line to see what happens there. Let's get rid of this trend line, as this trend line was broken last week. So that trend line is no longer valid. We are currently working within this price structure here. So this price structure here is going to give us our directional bias for the week to come. All right, so now it's time for GameStop. I know everybody's talking about it. I mean, Wall Street Bets is absolutely assuming that they are the reason for all of this bullish price action on this stock. And I'm not going to sit here and say that they're not. You know what I mean? I mean, when you got a lot of followers, you do have a little bit of sway as to what can happen. However, if you look at this push here, and then currently we have made this massive spike to the upside today. I mean, we got to as high as 159 spot 18. This thing was trading, all right? This thing was trading before the breakout. It was trading at $20. And you're trading at $150. That's a massive move. This is a short squeeze. Absolutely. Nobody is buying GameStop. Their company financial reports suck. They are losing money. They are losing money. They have cash on hand. I think the last time I checked was around $400 million. So they do have cash on hand. And the guy from Chewy, I know, the guy from Chewy stepped in and is going to help them to get this thing going. You know what I mean? So yeah, he's happy. He is absolutely happy. But as you can see, we closed this gap. All right. Technically, you traded all the way up to this area right here, and then you came all the way back down, closed the gap, pushed back up, and then closed bearish. You filled this gap. You have a nasty wick. This could obviously be the makings of a blow off top. Now, it is too early in the week to say if this is a blow off top or not. All right, so I can't pull up Thinkorswim's charts for you guys yet because I have not loaded the application on the new computer. I have it on my other laptop. The implied volatility for this week's expiration is 545%. So when the implied volatility is cranked up on an asset like this, you can't buy any puts or calls because you can absolutely be right on the direction. But if this thing trades sideways for the next 2 weeks, your puts or your calls will get destroyed from the volatility crush. All right, so sideways markets destroys volatility. You can't buy calls and puts when volatility is increased so drastically. So how can you play this? Well, first off, let's go look at this. All right, I'm going to pull up the XRT, which is the S&P retail ETF that tracks GameStop. Just something to put into perspective. All right, let me just click back on this real quick. Today, GameStop was the heaviest weighted stock in this index. It went all the way up to 5%. All right, and the next largest component is just below 2%. So as you can see with the market cap, this became today the biggest stock traded within this ETF. And you can see that you have a similar movement to GameStop. All right, this one didn't close nearly as bearish. Basically, I'm bringing this up to tell you, as retail investors, you are not alone in this market anymore. You might have been on the first short squeeze, but you are not anymore. This is tracked by a lot of big funds. They are absolutely getting involved in this because they are looking at this as an opportunity. All right, let's go take a look at Bed Bath & Beyond. Why look at Bed Bath & Beyond? Bed Bath & Beyond has absolutely nothing to do with GameStop. All right, then why can't... Well, then explain to me this candle here. All right, if Bed Bath & Beyond has absolutely nothing to GameStop, why is this candle or intraday price action look almost identical to GameStop? All right, why is that? All right, here's GME, right? Bed Bath & Beyond. Look at that. Almost identical. Guys, you are not alone. The big guys are in this market. The XRT is the retail, obviously. And today's price action in the option market for the XRT, the Sizzle Index, was over 6 times higher than it has been trading in the last 5 days. That's insane. 6 times more calls and puts were bought in today's session than in the last 5 days combined. All right, JWN, another one. Nordstrom, they are tracked in this same ETF. Let's go check them out so that way you can see what I'm talking about. Price action is almost exactly the same. You guys are no longer alone in this asset. What am I looking for moving forward? I want to see a push up on GameStop. All right, I'm just going to be looking at GameStop because it's basically leading the ETF. All right, but I'm definitely not going to buy any calls or puts inside of GameStop. I did buy one YOLO play today. I do not suggest you do that. The next week's expiration on GameStop, which is 4 days out, is up 545% on the implied volatility alone. So if you buy any calls or puts, even if you're right on direction, if this thing trades sideways for the next few days, you're going to lose your money. So you can absolutely look at maybe possibly getting into the XRT ETF, the XRET ETF, the implied volatility for basically not this week, not the 4-day expiration, but everything lower is below 70%. So if I'm a trader and I'm looking to gain value in the trade that I'm about to take, then I absolutely want to take the best chance that I can take to make possibly a few bucks off of it. If you're buying YOLO plays on stuff like this just to try to get rich, that's not a profitable strategy. It's not going to work out for you in the long run. So you can look at BBY or BBBY, which is Bed Bath & Beyond. You can look at Nordstrom's, or you can look at the XRT ETF in itself and wait for that pop in price. So essentially, what we can go wait on, let's go look at an hourly time frame. Let's see what we got. Yeah, this is massive. All right, so I don't really like that. Let's go to a 15. All right, so here we go. Let's see what happens on GME, all right, at the $95.90 area. That doesn't mean I want you to go short here. That doesn't mean I want you to get long here. What this means is let's watch to see how price reacts around this level. It may go completely higher. It may go up there reverse. We don't know. All right, but if we show an inability tomorrow to get above at least this 15-minute market structure here at 103.80, might be an opportunity to look to buy some puts on XRT or Nordstrom or Bed Bath & Beyond. It's your call. When you go into your brokerage account, I don't know which brokerage account you guys are using, but on Thinkorswim, it gives you the put sizzle index. It gives you everything. It gives you the implied volatility. It gives you all the Greeks. This is what you need to understand when you're going to trade options. You can't just say, I'm going to buy a $2 put on this thing because it's trading. Yeah, you can't do that. You're not going to make any money, especially buying it with implied volatility up 500%. I went all the way down to the 725 days out expiration on GameStop, and it's trading at 130% implied volatility. 130% implied volatility. So that means you're paying 130% more than you should be paying for any call or put, even that far out. Wait for this thing to calm down a little bit, or look for plays on XRT, which is the ETF that tracks most retail, or Bed Bath & Beyond, which is also a crap company that nobody has put a lot of money into recently to try to help them turn things around, right? All right, so let's go look at Bed Bath & Beyond one more time, just so that way you can get an idea as to what I'm talking about. Now, on a daily chart, this thing has been making a nice move, but GameStop is the reason for that. All right, GameStop has pushed this thing up too, because the index funds have to rearrange things when stuff like this happens, because they can, they have to. They own so many shares of the ETF, so that when stuff like this starts happening, a lot of your charts will trade almost identical. That's because the big money is involved. All right, you may think you're going to get just a big ass massive short squeeze again tomorrow. I don't know. I think your short squeeze is done. I think there is no more juice in the squeeze. I could be wrong, but it would be a lot easier and safer and more risk averse if you would trade something like this that has a whole lot less of implied volatility already priced into the option market. All right, and this thing was in a steady downtrend. It looks like it has found support all the way down here, but I do believe that we will be testing at the very least 25.11 again in the near term, possibly in the next week or two. I do see that happening, and you can look at the financials on Bed Bath & Beyond. It is not in good shape. That is why there was such a massive short squeeze on this. It doesn't mean that the stock is going to the moon. It simply means that a lot of big firms were caught off guard, and that's why you have such a massive move. All right? So it's time to start thinking smarter. Don't think like an idiot. Don't just go YOLO everything all the time. Think smart. Think how professional traders think. All right? And then you might stand a chance on possibly pulling out some profits on this move. So going forward, I do suggest if you want to buy puts on GameStop, I would look to buy them in XRT, Bed Bath & Beyond, or even Nordstrom's. Nordstrom's ticker symbol is JWN. All right, and you might be able to look around in that sector and see similar moves and find cheaper options. That is the way that I'm going to play this. That is the way that I suggest you play this. With all that said, guys, make sure you hit the like button. If you're not already, make sure you subscribe. Drop a comment in the section below if you want me to look at an asset for you. I will do my best. Make sure you leave the time frame for the amount of time that you are looking on that asset. With all that said, guys, have a great night. Trade safe and happy trading.